Ramkumar Krishnamachari, CFO of Justdial, joins us. Ram, it's not turning out to be a very pleasant Thursday morning for your stock. Now, sequentially, your top line growth was muted and is one of the slowest, at least, I've seen ever since you've gone public. Now, what explains that?
No, actually it's more internal rather than anything external. So what has happened is we delayed on our expansion strategy. There was a delay in it, both in the main and the remote cities, result of which our volume growth got impacted in this quarter. We've addressed that, and coupled with some of the rationalization that we have done on the premium positions and as well as pricing, should address some of these growth in over the next few quarters. So definitely the delay in expansion of our on the sales front has caused the impact, has impacted in volume. So which is purely internal to us. I don't think there's any external factor which is involved in this sort of slowdown in growth.
Right. So, I mean, how have you rationalized pricing, and what's the change, and how differently are you positioning to your customers and vendors versus other integrated players who are now intensifying competition?
Yeah, so what we have done is we have expanded our premium position slots, as well as made sure that the pricing for those positions are more fine-tuned it to reflect the demand supply economics from a advertiser standpoint. So you will find for various pin codes, category combination, the vendors would find it far more attractive to advertise and from an ROI perspective on Justdial as compared to other platforms, other traditional platforms. So we have done a lot of fine-tuning in the pricing rationale, as well as we have expanded the slots for the premium or the fixed positions. So that's what we have done. We believe that this will attract a lot more advertisers on the platform, both on a on a combination of pin code plus category basis. So some of these will take a couple of quarters to sort of see the impact, but we believe we are already seeing some green shoots.
Margins have been under pressure, but we understand it's largely because of those high employee expenses as well. What's the outlook for the rest of the year? Because your Search Plus launch and the business expansion will weigh on the operating performance.
So definitely the Search Plus launch expense that we mentioned earlier on the advertising, we have already announced that the quantum of the 100 crore odd expense, how much it will happen in this year, it's anybody's guess, because we will start advertising, we should start advertising say December onwards. But I would say from a margin perspective, look, we have maintained that focus is making sure that we invest in the right areas, including getting talent on board, investing in technology, etc. So we will continue doing that. We are not going to sort of rationalize any of those expenses, because we believe those are critical for the medium to long-term growth of the company. So we will continue making these investments. So what we have seen in Q2 is basically because of the drop in top line growth, and that has impacted the margin. Also, the fact is that the entire impact of the employee additional expenses that we incurred for employee expansion, as well as the increments that we gave, the full impact of that has come in Q2. So combination of both these is what has resulted. As far as the entire year is concerned, what I would maintain that we will continue investing the trend of investing in technology, investing in adding top talent into the company. That will be the major thrust and focus. Invest in expansion. So we will continue that rest of the year. As far as where we end up in margin, it will be anybody's guess, because it depends on how the top line growth gets reflected. So I wouldn't want to speculate at this point of time.
So what's latest on the commercial launch of Search Plus? Now you've earmarked about 100 crores as marketing spent for this launch. How will that be spread out in coming quarters? Could you give us some insights on the monetization of this roadmap?
Yeah, So, as I mentioned, first thing is to get the communication out. See, right now, today, Justdial as a platform is known as a search platform. It's not yet, from a mass consumer perspective, we are not yet known as first, first port of landing as far as transaction is concerned. So, we would send the communication out to the consumers to tell them that how easy and efficient and how they can have price discovery on a platform like ours, so that we become the platform of choice, first choice when it comes to doing any transaction on the on the internet. So now, well, let me give you a small example here. For example, in the e-commerce, what we have done is we have shown comparative prices of Flipkart, Amazon, Snapdeal, etc., apart from our vendors prices, that offline vendors. So we are saying, from a consumer perspective, you don't need to go anywhere, come to Justdial, do your comparison, and whatever choices that you have to make as to which through which platform you want to make, you do that. So these things have to be communicated. Now all those value proposition, what we call, has to be communicated to the user. That we are going to start through a process of evangelists going door to door, telling, having the users download the app, engage with them how to use the app, and essentially we want more than download, we want the users to use it and engage with us. And once we start doing that, from our perspective, monetization will be a natural outcome of that, because for all these e-commerce transactions, people are willing to pay anywhere the commission that is there, and as well as grocery order, food order, etc. So monetization, I'm pretty confident once we do the commercial launch or the big bang launch of this product. Right now it is in a soft launch, it's already there. We did a good campaign as far as the app download is concerned, which has been immensely successful. We got about more than 1 million downloads. But then what is more important is to reach out to the mass consumers. Once that happens, perhaps it may not be too ambitious to expect monetization to start from, say, first half of next year.
Right. Late August, the board had approved a buyback of up to 25% of the paid up capital and free reserves as well. What's the latest on that?
So we would be buying at 15.50 per share, and we have already sent notices to the shareholders for tendering. The process is already on. We are hoping that in another 45 days, or month and a half, we should be able to complete the process.
Now, India's largest domestic institutional investor, Life Insurance Corporation of India, that is LIC, is once again betting big on Indian equities. Now, this fiscal alone, LIC has bought stocks worth 50,000 crore. Vijay Iyer joins us with details on the exclusive what exactly